I think we're in a risk-off period, and for all assets, if you look at the stock market, the more risky or volatile parts of the market have come in dramatically since mid-February, and I think a lot of the concerns have been around inflation. Initially, that was helping Bitcoin because obviously Bitcoin's a very important inflation hedge. You know, it's a rules-based monetary policy, the first global rules-based monetary policy we have ever had. Hugely important reserve currency of the crypto asset ecosystem. But I think what's happening right now is because the stock market, the highly volatile part of the stock market, the innovation-oriented part of the stock market has gone through such a correction, which has been flamed by inflation fears. I think the correlations among volatile assets are going to one right now, and that's including Bitcoin. People like Elon Musk to pull away and say, whoa, let me make sure I understand this. And we believe that even this is going to change because, first of all, right now, the percentage of Bitcoin mined with renewables and hydroelectric power is quite substantial. I think in China, it's over 50% in renewables. And we also believe, and we wrote a paper in conjunction with Square on this, and we're going to have a conference about it in July. We believe that Bitcoin mining integrated into the distributed grid, and by that I mean solar roofs, power walls in homes, utilities, merchant power producers, starting to include Bitcoin mining in the ecosystem. Why would they do that? They would do it because renewables are intermittent power sources, right? You never know how low is low when a market gets very emotional. A lot of traders see Bitcoin dropping below the 200-day moving average. Which was at 40,000. So traders, once that happened, they just dump. Some just dump and run. I think we're in a capitulation phase. Yassine has a dashboard. We were looking at all the indicators this morning. They are all suggesting that we are in the capitulation phase, which is a really great time to buy, no matter what the asset is. A capitulation phase is buy. It's on sale. Now, am I saying 35,000 is the low? You know, if traders, and there are a lot of speculators in Bitcoin, if they are running for the hills just because Bitcoin has broken through a moving average that is important to them, it could continue. But all of our indicators are saying this is capitulation right now. And I think the research professionals at the SEC, they understand Bitcoin in particular, and I think are much more comfortable with it now that we've had several years to digest what exactly it is, go through a bear market, go through a bull market, now go through a bit of a bear market. I think watching the ecosystem evolve and actually become even more anti-fragile. You know, we're getting some real tests here. And if the system doesn't break, and I don't think it will, I think that their comfort will increase in a couple of ways. Number one, the infrastructure is there, is robust. Number two, the liquidity is there. I don't think that's going to be disproven here. And number three, the price is down from very lofty levels. So, hey, why not start an ETF after a correction in the market than before? So I actually think the odds are going up now that we've had this correction. I don't know if it's going to be this year or not. We hear perhaps fourth quarter, but you know, we heard third quarter before that. So as we get closer to the fourth quarter, we'll know how much is being pushed out. Panic buying. And so what I believe is we are setting up for a massive period of deflation. Now, let me explain that. There are three sources of deflation. One is when the orders, these double and triple orders, are canceled, right? Now, we have seen lumber correct 30% in the last week. I think this is the beginning of that. Copper is now starting to correct. And I believe that commodity prices went too far, too fast as businesses were scrambling and panicking, right? They were losing business to competition if they hadn't planned their inventories correctly. So that's one source of deflation, but that's only cyclical deflation. And we actually didn't expect it to start now. We expected it to start later in the year, but I guess it makes sense now that vaccines are here and consumers are shifting away from goods towards services or at the margin. The writing is on the wall. Those are double and triple orders are going to be canceled. Prices were too high, and we're probably going to see a drop in commodities. But there are two other sources of deflation out there, and this is what we've been saying for quite some time. One has to do with, it's a good deflation. It's caused by technologically enabled innovation. And we believe when you see DNA sequencing costs dropping 40% for every cumulative doubling in genome sequenced, or when you see AI training costs dropping 37 to 50% per year, these are massive deflationary forces that are going to hit every part of the economy. AI is going to be everywhere. So that's good deflation. Now, what's bad deflation? Bad deflation is going to hit those companies that are going to be disintermediated and disrupted by all of the innovation that we talk about all the time. Well, as we were having such an incredible year last year, and I do think the coronavirus crisis caused it, innovation solves problems. I kept saying to everyone, everyone in the company, we must stay humble. We must stay humble, and we know this is going to come to an end. We're going to go through a severe correction, and we have to just keep our heads down, focused on our research to keep our conviction and drive our strategies forward. That's what's happened. Keeping our heads down, hopefully staying humble, and really trying to educate people. The great opportunities available out there. Get on the right side of change. This is going to be the most amazing period of my investment career. And I've been through 40 plus years because we've never seen 5 innovation platforms evolve at the same time, all of them leading to exponential growth trajectories that are going to transform people's lives. And so I say just, read our research, talk to our analysts on Twitter if you really want to learn more, and join the ride, because we believe it's going to be magnificent. Actually, as a firm, we've not had 1 month of redemptions. The ETF platform had, if you go month end to month end, which is how we measure this sort of thing, right? Our redemptions in March were 500 million. We've had positive flows in April. May, it remains to be seen. It's been nip and tuck. It may end up being a small, depends on what happens in these last few weeks. But if there's real capitulation, sure, we could have a big outflow, but I think that's capitulation.